Hello guys, Currency Games here. Today is the 17th of October and we are at the moment we are looking at Eurusd. So today what I'm going to do is I'm going to go over the PA that took place today during London and New York, and I'm going to go over my forecast for tomorrow and what I think we should see happening tomorrow on Eurusd. Okay, so let's start off with how we ended yesterday on my forecast for yesterday. If you recall, I said this H4 FVG here would be my draw on liquidity on a higher time frame, because that also links up nicely with this daily fair value gap as well, considering we rounded off at the what level is this, at the 96, I'll say it's 97,000 level, 97,000 level. See, these numbers always confuse me, fam. Like, me and numbers just, it confuses me a lot, I'll be honest with you. But we'll say like yeah, 97,000 level, we rounded off nicely and we were being attracted to this H4 fair value gap. So as I said yesterday, that fair value gap there was my draw on liquidity for today. Okay, now let's go down to the lower time frame and see how you could have done your execution today. Let me just say from now, today I didn't execute. Today it didn't give me the PA that, you know, would have consisted in a low high probability up for me. But you know, it's Monday, it's fine. We aren't going to force nothing. We're just going to go with the flow and we'll get in when we need to get in. Okay, so let's go in a 15-minute here. So this here pretty much is today's price action. Let's start off with the H1 actually. Let me get rid of this thing. Cool. So this is what happened today in the H1. Notice our bias was long. We had a bullish bias. Why? Because of the H4 fair value gap and the daily fair value gap that we were looking to go into yesterday. Okay, had the order block here and the fair value gap here in the H1. Okay, when our bias is bullish in our higher time frames, the bullish PD arrays that occur in price should stick and hold. Okay, let's go down to the 15-minute. Now, one thing we should pay the utmost importance to is the daily open. And when I say daily open, I'm talking about really truly it's London, the New York 12 a.m. New York time is true day open. Okay, and we should always see if we're bullish, we always want to see a drop below that level. So the 0 GMT time, we want to see a drop below that level going upwards into to fulfill the daily bias, should I say. So let's look at it today. Let me put the New York and London indicator on. Okay, cool. Notice how price was meandering throughout Asia session. Really and truly, we had a drop below and a bullish move up. Now let's look at this bullish move here, because this is where some people might get in and think this is where the bullish move has started. Now when we came down, and I think we maybe tapped in this fair value gap, but when we came down and went below the 12 a.m. New York time here and we came up, we didn't really come up with that much aggression. You know, it was a very lethargic move up in price. And if you look, when we came up to this high on the M15, all we done was pierce it a bit and then come straight back down. And then when we came straight back down and made our true swing downwards to go upwards, you will see how we came down quickly and came up very quickly, and we ended up breaking this high with a very bullish candle, should I say. Like, look how you pierced that high and stayed above it as well. Okay, and look how we also create a fair value gap. So look at this run here compared to this run here. This run is a very should I say, a very strong run bullish. Okay, and that run also occurred within the H1 fair value gap here and that H1 order block. So we came down and we even took out this H1 low as well. So there's a lot of confluences here to go bullish, to be fair, looking back at it. New York time, we came down and retraced nicely back into this range that we made during London session and London lunch, and went long to complete our daily range pretty much, and hit this hateful fair value gap up here. Now, why didn't I get in? With me in price and when I trade, I want to see exactly what I want to see. And now, if I don't see what I need to see, I'm not getting in. And in all honesty, this candle here was one of the main reasons why I didn't take longs today, because I did not like how this candle closed as a bearish doji. This 6 a.m. candle here wasn't for me at all. Now, in hindsight, it's easy to say you would have gotten here, you would have gotten there. And this is the mistake that a lot of traders will end up making. Because when you're looking at price in hindsight, everything looks so easy to predict. And everything looks perfect. But it's only when you're actually in the situation and you're watching price live, that's when you've got to have a proper analysis hat on and actually think about what is what and what actually looks like something that's high probability. And since understanding that, I just learned that this here did not look high probability to me. I'd rather have just seen a nice bullish close above that, above these highs here, and come back down and then gone up. Okay, and you know what, I'm happy I didn't enter it, because every day in price is a study session. You know, like every time the New York session closes, you should be studying the PA that took place that day. Even if you didn't get in a setup, that is a day to study. You know, people always think that you should only study your winners or only study your losers. No, you should study every single day, because the days where you might not have got in, maybe there was a setup where you could have done something, where you could have made your percentage for the day, but you didn't take it. And you know, the reason why you didn't take it needs to be delved into. You need to study that reason and then ask yourself, was this a valid reason for me not to take my setup? Did I follow my rules here? And I can safely say, yeah, here it wasn't in my rules. It's not what I like to see as when I want to see price break market structure. It's not my type of PA, you know. But to each individual, their reasons will be different. But as long as you're true to yourself, and you're true to your plan, it's really good to study the PA, even if you took a win, took a loss, or didn't take a setup at all. And another reason is because not taking a setup is taking a setup. Okay, not taking a setup is a position. Like not taking a setup itself is a position in the market. Sitting out and being on the sidelines is a position. The mental strength it might take to not take a setup might be more than to execute, if that makes sense. Like, it might take more discipline to not take a setup. It might take more of your mental capital to not take a setup than it is to take a setup. Because for you to say to yourself, no, you know what, this one ain't worth it, it takes a lot of discipline to do that. So yeah, moving on. If you recall on my Instagram, at around this candle close here, I was very confident that we were going to pierce this high up here and continue on to our original bullish fair value gap target. And when we did close, let me get the replay tool on. When we did close here, I was looking for maybe a drop down into this FVG, or drop down here for a run back up and take out these highs. However, it being late into New York, it's understandable that that PA might not happen, and it's probably done all its business down here already. So it's fair enough, you know, it's one of them things. I'll try and provide a picture of what I did say on my Insta exactly about this level up here and how this was my draw and the time I said it. But yeah, and then after that we just continue to go bullish. But look how long it took me for me to be confident on longs. It took me all the way up until this candle closed. This 9 a.m. candle closes when I was confident on longs for the day, like very confident. Why? Because you made equal highs here. Let me go on 50-minute. We made equal highs with this high. Let me get rid of this candle again. We made equal highs with this high and with this high. Liquidity is building up substantially, and we had a bullish bias up here in this HL fair value gap, and we dropped below New York, the open, and broke structure bullish, came down and broke structure again here. And then if we did get the retracement to come back down here to then target this high here, that would have been beautiful, and I would have been in that, safe to say. Okay, well, that's just a little study of PA that we had today, and I hope you found that helpful. If you do have any questions, just don't be afraid to DM me on Insta, and I will provide the link to my Insta in the description as well. But anyway, let's go into Eurusd and what I forecast for the upcoming day, which it will be Tuesday. So Tuesday coming, I believe that we have made a fair value gap just below here on the H4. Now, when it comes to my drawn liquidity, I don't like to go below the H4 because things just get a bit too messy for me. Below the H4, I'm mainly looking for my setups to occur. Above the H4, I'm looking for to find my bias and to find strong levels of support and resistance, ideally. And as I said before, we've come into this daily fair value gap here, which is also H12. We could come a bit higher to this order block, then drop off, but who knows, we've got to wait and see. But what I would like to see is possibly if we could get a structural high to be put in place there on the H4. Now, if we do get that, and we'll have to wait until 10 p.m. For this candle to close and for a new daily candle to open, this H4 FEG down here could be used as a draw on liquidity. Now, I would need to see nice H1 price action or nice H4 price action to take us down there, but that is where I'm possibly looking at the moment. And actually, let me go back a bit as well, and let me get that Fibonacci back on there as well, just to show you something else. I would also be careful of the fill of this fair value gap that we might create here, and I wouldn't be interested in anything that happens below the 50% level. So if I am taking a short, it's a very, very short term short up to the 50% level. Once we get here, I will be very wary of taking any positions at all. The reason for that is we are already in this daily fair value gap. When we reach here and we reach this order block and this fair value gap, if we do reach it, we could go bullish or we could go bearish. Now, if we were to come down from here and take out possibly this low and this low, our bias that we originally had for the week will show to be true, possibly, and we possibly will be going bearish the rest of the week. However, if we come down here and we have a nice rejection upwards, and when I mean nice rejection, I want to see a nice H1 and M15 price action down here to go bullish, then longs could be something I'm taking. But this area here is my point of interest, to be honest. This H4 order block, and it's also my drawn liquidity at the moment. This is also providing that this candle does close as a and leaves this high here intact and doesn't break it. But yeah, EU at the moment is just that short term. That's a very, very, very short term draw down here. But we'll just have to wait and see what we get when we come to London Open tomorrow, because things could change overnight. Just gotta stay on our feet. With day trading, you gotta be on your feet all the time. So yeah, that's that for today, guys. I hope you took a lot of value when it comes to the daily open and how it can play out. And yeah, I'll see you next time.